So last week 4 out of 5 days S&P 500 traded red, and 5 out of 5 days Dow Jones traded and closed as red. And if you notice, S&P 500 and the market is in the bullish trend, and this is not bearish. So why this is not bearish? If you notice that for the entire week S&P 500 was range bound, it was trading in between the two defined levels or heavy zones. That is why overall the movement was up down. It was neither bullish nor bearish, and this clearly indicates S&P 500 is still in the bullish trend. There is no change of trend. However, this change of trend can be seen as early as on Tuesday, not Monday. Monday will be very unique and very different. Okay, so that I will tell you later through the chart of the Dow Jones. Because now the S&P 500 has strongly sustained at the zone for last many days, and also managed to close above. Only on Tuesday it closed below the zone but at the moving average, and on this day the closing was at 6035. And in the same day, in my midday update to my Patreon community members, I have mentioned 6035, that there is a 6035, and the S&P 500 may lose the zone. Which zone? This strong support zone with the possibility of 6035. However, on Wednesday the market managed to save itself through the neutral inflation data. That is why on Wednesday we have seen a heavy gap up open. It moved up, and again it has seen a rejection at the strong resistance level, closed below the resistance level. Next day the same thing, closed as red. It was supposed to come down, but the Dow Jones came into the saturation, and that has helped the S&P 500 to give a gap up open yesterday. This gap up open was because of the Dow Jones. There was the K equal to 0 condition in the stochastic RSI, and this has put the Dow Jones in a condition wherein a surprise bullish reversal, bullish retrace can happen. And also I have mentioned that if there comes a gap up open, then also that gap up open will be only because of the above mentioned conditions of the Dow Jones. So without the help of the Dow Jones, without the saturation in the Dow Jones K equal to 0, based on the closing on Thursday, S&P 500 would have lost heavily. But the Dow Jones managed to save the S&P 500 and the market. And yesterday when S&P 500 came down, it again managed to sustain at the strong zone, very strong support zone. So yesterday in my midday update also I mentioned that the zone, or the heavy support level, has worked and is working and will work as a strong support for the S&P 500. And now there is a possibility of a little breach. Okay, this breach will happen, or the S&P 500 will lose the zone only if the Dow Jones moves towards the next heavy support level or below 43,800. However, Dow Jones never traded below 43,800. That is why S&P 500 managed to sustain at the heavy support zone. So what does all of this signifies and indicates in the S&P 500? This signifies and indicates that the S&P 500 is not willing to lose anymore. It doesn't want to lose, because if I show you the conditions here, the MACD is bearish, stochastic RSI is bearish, there is heavy bearish pressure on the S&P 500. However, the S&P 500 still managed to sustain at the heavy support zone, and now there are the moving averages at or around this the zone, and it is making it very heavy. What does this mean? This means that only a strong reason is needed in order to breach and to lose this the zone. Now what will happen once it loses this the strong support zone? Then it will be really bad, very bad, because In that case, the S&P 500 will come out of this the long term bullish trend, and there will be a shortfall. Okay, this shortfall can convert into a long fall depending on certain conditions. However, if it sustains, or just like as it is sustaining, then the movement beyond 6100. So I will discuss all of these, the conditions: bullish condition, bearish condition, fall, rise, Monday a gap up, open. Okay, also, so all of these are condition in detail in this S&P 500 weekly technical analysis. So guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you are looking for these daily precise updates of the S&P 500 every day from Monday through Friday, each and everything, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now guys, I am going to discuss the agenda of this S&P 500 weekly technical analysis. The first point of the agenda is the S&P 500 technical analysis on the weekly chart. There is a very little change on the weekly chart. In the S&P 500, there is not much visible change, and S&P 500 is still absolute bullish in the heavy bullish trend. Yes, in case of the Dow Jones, there is some heavy change. Okay, so that I will discuss in detail. Weekly chart is the long-term picture for a week, for a month, for a quarter or so. Okay, and long-term chart is the trend setter. Whatever trend is in the market, it is seen through this long-term chart. Second point of the agenda is the S&P 500 technical analysis on the daily chart. On the daily chart, you can clearly see that S&P 500 looks like S&P 500 is in consolidation. Okay, and it can remain so, okay, in the similar manner in this same movement or so, at least until Wednesday. On Wednesday, it will have to come out of the consolidation irrespective of anything. Okay. However, on the daily chart, Dow Jones is heavily bearish and is trading in the overstretched level, in the oversold levels. Okay, or so. So there is not much room left in this the bearish side, and also the K is 0 on 2 consecutive days. Okay, and now D is going to be 0, means absolute bearish saturation will be there, and then there will be a heavy bullish reversal. Okay, kind of you can say like short squeeze we can expect. 2%, 3% bullish movement, sharp, sudden. Okay, that this is what I'm talking about. Anyways, I will discuss this on the daily chart. Okay, third and the last point of the agenda is the probable movement of the SP 500 from December 16th, which is Monday, to December 20th, that will be Friday. Whatever is going to happen in the S&P 500 from Monday to Friday, the next week, from December 16th to December 20th, I will discuss in the last point of the agenda. However, guys, let me remind you, if you are watching this video for the very first time, that all of these three sections are interrelated, are interconnected. So when I say the probable movement, okay, so by the time I come to discuss the probable movement, I've already discussed around 30% of the probable movement in the first and the second point of the agenda, because I discussed the candles, the patterns. Okay, so that covers a lot of probable movement. Okay, and saturation, or these are things. That is why it is highly recommended that you should watch all of these three sections in order to understand what is going to happen in the S&P 500, nasdaq, Dow Jones, and in a manner in the entire US stock market in the coming week, in the next week, from Monday to Friday. Now guys, I am going to discuss the first point of the agenda, and here I will do the technical analysis of the S&P 500 on the weekly chart. So this is the weekly chart. Weekly chart means one candle represents 1 week, not 1 day or 1 hour. Okay, one candle means 1 week. Now look at the chart carefully, just look at the chart. Where is the bearish movement? Okay, you will not find any bearish movement on the chart, because this is the weekly chart. Okay, and weekly charts are the stable, and weekly charts are also the trend setter. Okay, because a trend is deduced through the weekly chart. Weekly charts are the long-term charts, so there is nothing bearishness. Okay, now let's analyze the technicals to see if there is any bearishness through the technicals or not. So before that, first comes the candle. So let's first discuss the candle. But guys, before that, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you are looking for these daily precise updates of the S&P 500, Dow Jones, and for the entire market in a manner, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now guys, let's discuss the candle, the last candle. Now if you notice, the open of the candle was below the closing of the previous candle but above the open of the previous candle. The closing of the candle was above the open of the previous candle. This indicates very limited weakness, very limited pressure, very limited bearishness. Because for the bearishness to come into the picture, at least the close must be below the open and the closing of the previous candle, so that we can say, okay, yes, there is some bearishness. Okay, however, in this case, what you are going to see that the closing of the last weekly candle was 6051. Okay, and the last to last candle, the open was 6041. Because the closing was not below the open of the previous candle, so no bearishness as such. Okay, yes, there is some weakness is there, some little weakness is there, but this cannot be seen or considered as bearishness. Okay, and also you can see the same. Okay, so when you look into the chart, the movement, then you will notice, okay, it is nothing, just a very little. Okay, now there is no defined shape of this candle. Okay, and also this candle does not confirm any gap up or gap down open. Okay, this candle is simply a neutral candle. I will not say a bullish candle or a bearish candle. I will simply say a neutral candle. Does not indicate any gap up open, does not indicate any gap down open, does not indicate the fall, or does not, okay, this or this. And the most important part is the closing was above the heavy support level. Okay, this heavy support level has or is helping the S&P 500 for last many days to sustain. Okay, without this heavy support level or this heavy support zone, S&P 500 would have lost heavily. Okay, but it is helping. This is why again and again to my Patreon community members, I mentioned that irrespective of the movement of the Dow Jones, okay, the S&P 500 is expected to trade in between this heavy support zone and the heavy resistance. For the entire week, S&P 500 traded in between these two, okay, with a little breach. So the candle is clear, so nothing is special about the candle. Okay, no gap up, no gap down, nothing. And also through that through this candle, it cannot be said that, okay, on Monday there will be, irrespective of anything, there will be some pressure. No, nothing can be said. Okay, just neutral. Okay, based on the open, it will give the movement on Monday. Now Dow Jones. So Dow Jones, it is a little different. In the Dow Jones, okay, if you notice, see, this kind of candle is what we are seeing in the S&P 500. Okay, so you can easily recognize this kind of pattern, this kind of candle. Okay, this kind of thing in the S&P 500, and you can easily recognize the same in the S&P. Okay, here S&P 500. However, this is the Dow Jones. Okay, this is the chart of the Dow Jones. Okay, now in case of the Dow Jones, what you can notice is that this, the last candle, is a heavy bearish candle. Why it is a heavy bearish candle? Because the closing of this candle is below the closing of the previous two candles. Sorry, closing and open of the previous two candles, and also the closing of the this candle also. Okay, and other than that, okay, percentage points, if you notice, it is 1.9% or 1.8% it has lost. Okay, other than that, it closed just below this, the moving average, just below. It failed to close, failed to sustain at this, the moving average. Otherwise the situation would have been entirely different. Okay, what this indicates? Bearishness, weakness. But does this mean, does that mean that there is a bearish trend? Absolutely not. No bearish trend. Why? if you notice, okay, clear fan out in the moving averages, it is just moving up, up and up. Okay, limited fall, limited fall, limited fall, limited fall, limited fall, that's it. Okay, and then recovery, bullish, recovery, bullish, recovery, bullish, right? So this candle simply indicates that on Monday, okay, on Monday, irrespective of any open, now as such, it should give a gap down open. There should come a gap down open because of this closing in the Dow Jones. Okay, but there may not be a gap down open, and this I will clear on the daily chart. Okay, because of the saturation. So, but yes, what is clear is that irrespective of any open on Monday, even if there comes a good or heavy gap down or heavy gap up open, a gap up open, then also irrespective of any open on Monday, there will be an initial or intraday bearish movement, there will be fall. Okay, whether this fall will be heavy or limited or normal, it will depend on the heavy support levels and the moving averages. Very simple. Okay, and if you are my Patreon community member, then you need not to worry about this heavy or limited, because I will, because through the pre-market, okay, and the midday update, okay, I will tell you where it is going to hold, or which level is going to give the support, and then there will not be any more fall, and then there will be a bullish movement on so and so. Okay, so this means that on Monday, irrespective of anything, okay, on Monday, irrespective of anything, intraday we can expect bearish movement or bearishness. Also, because here I'm talking about the weekly chart, so just not just on Monday, but for the entire week, okay, we can expect some bearishness. Means there may not come back to back green candles even in the best case scenario. One or two candles may be red. However, I will focus mostly on Monday only. Okay, so this is clear. This means that on Monday, irrespective of anything, we can expect some weakness in the market, in the SP 500, in the Dow Jones, in the nasdaq. Okay, there is only one thing that can counter this weakness, that I will discuss in the second point of the agenda, that is the daily chart. Now let's analyze the technicals. Okay, clear fan out in the moving averages. So S&P 500 is bullish through the moving averages on the weekly chart. S&P 500 is bullish through the Bollinger Bands on the weekly chart. S&P 500 is bullish through the Ichimoku cloud on the weekly chart. And S&P 500 is bullish through the MACD on the weekly chart. S&P 500 is bullish through the stochastic RSI on the weekly chart. Okay, all of this indicates that the S&P 500 is 100% absolute bullish on the weekly chart. It is neither overbought nor saturated. This week it was at the junction where it was about to enter into the overbought and saturation, but because of this limited fall, okay, it has not entered into that, but still it is at the junction of the overbought and the saturation. Okay, now Dow Jones, there is some change in the Dow Jones. Clear fan out in the moving averages, bullish. Bollinger Bands bullish. Ichimoku cloud bullish. MACD bullish. Stochastic RSI bearish. This is the only change. Okay. However, stochastic RSI is still trading in the bull side. Now, all of this indicates that the Dow Jones is 80% bullish. Okay, this is Dow Jones. Dow Jones is 80% bullish, but the trend is still bullish. There is no change in the trend at all. Okay, it is still bullish. Yes, through this the bullish chart, there is one more thing. There is a possibility that the Dow Jones can lose a little more, okay, to this the moving average, because this is the standard moving average. Whenever there comes this intra week, okay, fall, okay, then we have seen again and again it comes down, tests the moving average, okay, retraces, it comes down, tests the moving average, retraces. Okay, so there is still some possibility that it can come down and test the moving average. If this happens on Monday, perfect. Why I am saying that a fall on Monday will be perfect? Because on Monday it will hit the absolute saturation, then either on Monday itself, okay, it is already under the technical compulsion, then either on Monday itself or Tuesday we can expect short squeeze, a heavy intraday bullish movement, heavy, very heavy. So now it is clear that there may come a little more fall, okay, to this the moving average, and this is not because of the S&P 500, no, it is because of the Dow Jones. S&P 500 is absolutely not in a condition to to trade bearish or to give more, okay, but it is the Dow Jones. Dow Jones can compel the S&P 500, but still the S&P 500 managed to absorb the bearishness of the Dow Jones. This means that whenever the Dow Jones comes down to this the moving average, S&P 500 will be able to sustain at this the zone, okay, and after this very heavy zone there comes a limited zone, okay, then considering all of these the cases, S&P 500 will sustain, or irrespective of anything, S&P 500 is expected to sustain at or above 6100 mark. Simple, okay. This will be more clear in the daily chart section. Now guys, I have one more important information to share with you, and this is regarding the products or the programs, okay, that I offer. So now these are 8 hacks, 8 strong hacks, 8 premium hacks, 8 hidden hacks which you might not have seen or heard of, okay, and the accuracy is almost 100%, and these hacks work 100% of the times, okay. Although I mentioned 95% accuracy, keeping 5% margin of error, but this is just like once in a blue moon, extremely rare situation, extremely rare. Otherwise 100% accuracy works 100% of the times, okay. Through these hacks you can predict whether there will be a gap up open tomorrow, whether there will be a gap down open tomorrow, whether there will be a bullish candle, whether there will be a bearish candle, whether there will be a heavy bullish movement or heavy bearish movement, okay. On a particular day, date and time there will be a fall for sure, no matter what, okay. Many of these the hacks which gives you instant results, instant confirmation of what is going to happen, okay. Once again, almost 100% accuracy. Then modified technical indicators. So for example, on Friday, okay, I mentioned that there may come a gap up open, okay. So why a gap up open? Even on Thursday the conditions were very bearish, indicating more fall. This gap up open was because of the saturation in the stochastic RSI, okay. And see, this stochastic RSI is modified, that is why I was able to capture the saturation even before it can be seen, okay, if you use the normal stochastic RSI, okay. So that is the modified technical indicators. I have modified my technical indicators to predict the movement even before it happens, okay. Many of these are modified technical indicators. Then comes the options, okay, options trading strategies, premium calculator, and you know that in options, okay, 100%, 500%, 1000, 5000%, okay, it is just like very normal, especially on 0 DTE, okay. If there comes any good movement, then 1000%, very common, very normal, okay. Premium calculator, within 30 seconds, 20-30 seconds you can calculate the premium value of any spot, any strike. And guys, this particular program is the combination of these two programs. So guys, whenever you want to participate in these the programs, okay, then I have given the link in the description of the video and also in the comment section. When you follow that link, then you will see my Patreon page, and on my Patreon page there is this the shop button or the shop option, okay. When you visit the shop option, when you visit this the shop section, then you will find all of these the programs, okay, or the products. Now guys, I am going to discuss the second point of the agenda of this S&P 500 weekly technical analysis, and here I will do the technical analysis of the S&P 500 on the daily chart. This is the daily chart. Daily chart means one candle represents one day, not 1 week or 1 hour. One candle means one day. Now let's first discuss the candle. This is the last candle, but guys, before that, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you are looking for these daily precise updates of the S&P 500 every day from Monday through Friday, pre-market, midday update, final update, stock market opportunities, and everything every day from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. And guys, if you want to learn the premium hacks, the hidden hacks, and the options trading strategies, the premium calculator, then you can participate in these the programs. I have given the link in the description of the video and also in the comment section. Now this last candle in the S&P 500, if you notice, this candle is flat, the closing is flat. Okay, and the most important part is that the closing of the candle is above the moving average. And also, other than that, okay, the very important thing is that the closing of the candle, okay, is above the very strong support level or the zone. Okay, very strong zone. Okay, so although this candle signifies, because there are back to back two candles, two red candles, okay, there was gap up open, it lost, came down, so it signifies the weakness, okay, that there should come more weakness, okay, but its willingness to sustain at the strong support level at the strong zone indicates that any weakness is expected to be limited, to be restricted. Okay, limited or restricted weakness. Okay, what does this limited or restricted weakness indicates or means? This means that on Monday, okay, this moving average, this red moving average is helping the S&P 500 to sustain again and again. Okay, on Monday this blue moving average will further improve, will further move up. Okay, and it is expected to enter into the zone, and the zone will then become very heavy in a manner that again any fall will be limited, any fall will be restricted. The problem can happen only if there comes a heavy gap down open below all of these are moving averages, then that can be the only problem, otherwise not. Yes, this does not confirm any gap down open. Okay, this is there. So the candle is signifying weakness, bearishness on Monday, okay, initially or intraday. Now comes the Dow Jones. 1 2 3 4 5 6 7. Remember, this is the Dow Jones. Okay, 7 back to back daily red candles. Okay, indicates continuation of the the fall. Okay, weakness, pressure. Okay, this is what it is indicating. Okay, and it does support a gap down open. The candles supports a gap down open. Okay, in S&P 500 it was not the case, but in case of the Dow Jones, okay, it supports a gap down open or irrespective of any open, an initial or intraday bearish movement. Okay, now S&P 500 is also reaching to its limits. Okay, so this is clear through the candles. Now let's talk about the technicals. Technically, if you notice, clear fan out in the moving averages, but the closing, two closings, okay, inside the cluster of the moving averages. So moving averages are neutral but bullish, neutral but still bullish. Okay, not it is not bearish, not bearish. Okay, other than that Bollinger Bands bullish, Ichimoku cloud bullish. Okay, now comes the real problem. MACD bearish, stochastic RSI is bearish. This is what is putting pressure on the S&P 500, this combination. If you have subscribed to my YouTube channel for last many days, weeks, months, year, then again and again I've repeated this concept. Whenever or whatever will be the direction of the MACD and the stochastic RSI, or whenever stochastic RSI and MACD are aligned in a particular direction, okay, either bearish or bullish, then the momentum or the pressure, now it is bearish, this means the bearish pressure. If it trades bullish, this means that there will be the bullish pressure. Okay, that happens. So saturation etc., that is not there in the picture. Okay, so now it can clearly be seen that S&P 500 is 50-50, simple, 50% bullish, 50% bearish. Okay, and I'm talking about the daily chart. On the weekly chart it is absolute 100% bullish. Okay, now any more change in this, for example, if S&P 500 goes 70% bearish, okay, In that case we can expect more fall and more bearish pressure, because 50-50 is the last point from where S&P 500 can improve, okay, can re-enter into the bullish, okay, movement, trend, etc. Losing, okay, or giving up more and then coming out of 50-50 like 60-70% bearish, 80% bearish is not good, because that then indicate that more fall in the market. Okay, now Dow Jones, this is the Dow Jones. In case of the Dow Jones, moving averages, crossover in the moving averages, this is absolutely not good, not good. This crossover was not supposed to happen if the bearish movement has to continue. Okay, see, in case of the S&P 500, you can see that although the closing is inside the cluster of the moving averages, but there is no crossover in the moving averages. That is why it is bullish, neutral but still bullish. In case of the Dow Jones, this is not there because there is a crossover in 3 of these the moving averages. Okay, so what it means? This means that moving averages are clearly neutral but bearish. In S&P 500 it was neutral and bullish. Okay, in Dow Jones it is neutral and bearish. Okay, simple. Now Bollinger Bands bearish, Ichimoku cloud bullish, MACD bearish, stochastic RSI heavily bearish. Now Dow Jones is more bearish as compared to the S&P 500, and here we can clearly see that the Dow Jones is around 75% bearish, 75 to 80% bearish on the daily chart. On the weekly chart it was 80% bullish. Okay, so means that there is no change in the trend. This fall you are seeing, okay, that's it. So this is not the change in the trend. The trend can change even for the short term, it can change. Okay, for okay, if something, for example, yes, in case of the S&P 500 this has started to happen because the moving averages have given the crossover. Okay, on Thursday it has started. Okay, so the short term trend is changing in the Dow Jones, but S&P 500 no effect, no change. And also there is a probability that Dow Jones can give up a little more. Okay, because on the weekly chart there is a moving average, and that moving average, okay, so there is a room, okay, between the current fall and the moving average. Okay, and I have shown you that on the weekly chart there is some scope, some good scope that it can come down further. When that happens, then the S&P 500 will lose the strong support zone, will be coming down to the next support zone, and then eventually there will be a retrace, regain zone, and then move up, if this happens in the Dow Jones. But whatever is going to happen or whatever will happen, I will keep you posted through these daily precise updates of the S&P 500 every day from Monday through Friday, means S&P 500, Dow Jones, and in a manner to the entire US stock market. Okay, so I give the pre-market update before the open of the stock market, midday update after 3 hours, final update before the closing of the stock market, so that my members can prepare their trades for the next day. Okay, other than that, I give the stock market opportunities in the premium stocks, in the top 20-30 companies of the US stock market, in the S&P 500, Dow Jones, nasdaq. Okay, minimum 5 to 10 every week. So guys, whenever you want to join my Patreon community and you want to get these daily precise updates of the S&P 500, Dow Jones, and for the market, okay, whether the market will move bullish, will trade bullish or bearish, will sustain, will fall, will retrace, everything. Okay, even before it happens, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. And guys, when you follow that link, then you will see that this is my Patreon page, this is my Patreon profile, and here you will notice that there are these 3 levels or 3 tiers. This is all midweek update videos. Okay, midweek update videos are generally posted every Wednesday, okay, or Thursday, okay, once in a week. In this midweek update, so that is basically a technical analysis, a detailed technical analysis with all of the numbers, levels, zones, okay, movement for Wednesday, Thursday and Friday. Okay, what is going to happen on these 3 days, etc. Everything in detail, very very precise. Okay, so all midweek update videos, these two are same. The only difference is the geographical location. This is daily S&P 500 updates for non-US Canada residents. This is daily S&P 500 updates for US Canada residents only. So when you subscribe to either of these, then you will be getting all midweek update videos, whatever is posted. Okay, it is a part of this in this case. And the daily SP500 analysis updates, movement, momentum, levels, zones, okay, predictions, okay, opportunities, and the stock market opportunities minimum 5 to 10 every week. So all of these, okay, when you subscribe to either of these two. And guys, if you notice, many people have joined my Patreon community for last many days, weeks, months, years, and they are getting these daily precise updates of the S&P 500 pre-market, midday update, final update, and the stock market opportunities, everything, and the midweek update means the video technical analysis, everything. Okay, and these precise updates every day from Monday through Friday. So guys, whenever you want to join my Patreon community, then I've given the link in the description of the video and also in the comment section. You can follow that link, you can join my Patreon community, and you are welcome. Now guys, I am going to discuss the third and the last point of the agenda of this S&P 500 weekly technical analysis. And here I will give you the probable movement of the S&P 500 for the next week, means from December 16th, which is Monday, to December 20th, that will be Friday. Now, first thing first, number one, Tuesday, the retail sales data will be released before the open of the stock market. Okay, now as such, this data should impact the movement heavily. Okay, bullish or bearish movement. But on Wednesday, okay, FOMC decision and the press conference of the Fed chairman is scheduled. This means that if this data is seen positive to the stock market, positive to the Wall Street, then most likely the Wall Street will give a bullish reaction, good bullish reaction. Okay, if the data is seen negative, in that case the market can wait for Wednesday rather than giving any heavy fall or so reaction. Okay, so it will be very very much clear immediately at open what is going to happen in the market. Okay, on Tuesday. So if you are my Patreon community member, then I will analyze the retail sales data and I will tell you what we are expecting. Okay, bullish or bearish, and what will be the levels, bullish, bearish. Okay, what will the tiebreaker, everything. Wednesday, FOMC press conference of the Federal Reserve Chairman, FOMC decision, 2 p.m. Eastern time. Okay, FOMC decision, 2:30 p.m. Eastern time, press conference of the Federal Reserve Chairman. Okay, market will be heavily volatile until Wednesday end of the day, and the impact of this volatility will be seen or felt from Monday itself, and it will increase on Tuesday, and then finally on Wednesday it will be heavy. Okay, whatever happens after Wednesday won't impact much. Okay, once that trend is set on Wednesday, if there comes a bullish movement, heavy bullish movement on Wednesday, it remains bullish, it also clears my heavy resistance levels. In that case, it will go bullish irrespective of anything. Then there will be a center rally. Okay, if you have heard of center rally, then there will be a center rally. Okay, if it goes negative, if it goes bearish, then there will be a fall, there will be no center rally. Okay, and by the end of the year we can expect like bearish closing on the monthly basis. Okay, weekly basis there will be, on the monthly basis also we can expect bearish closing. Okay, so this is clear now in terms of the numbers. But guys, before that, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And so far, if you have liked this video, then hit like. And if you are looking for these daily precise updates of the S&P 500, Dow Jones, and for the entire market, precise levels, precise movement, fall, bullish movement, everything very precise. Okay, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. And if you want to trade with confidence and want to make 5% to 15%, okay, on a monthly basis, and you have some technical knowledge, okay, then you can participate in these the programs, okay, hacks, modified technical indicators, options, trading strategies, premium calculator you can learn, and then you will be able to predict by yourself, and there will be instant results with 100%, almost 100% accuracy, okay, and it works almost 100% of the times, okay. So I've given the link in the description of the video and also in the comment section. So guys, now what we know is that more than the S&P 500, Dow Jones. Okay, now why Dow Jones? Why? What is the purpose of discussing the Dow Jones? The purpose of discussing the Dow Jones is the stochastic RSI. It's been 2 days, 2 continuous days, and the K channel is 0. Okay, and now it is in a condition that if there comes any more bearish movement, means if the Dow Jones trades below 43,828 previous close, 43,828, then D will hit 0. Okay, K and D channels. This is, and I'm talking about the stochastic RSI. Now when K and D hits 0, then what happens? It is an absolute bearish saturation. Absolute bearish saturation in a manner then that the S&P Dow Jones will be compelled, will be technically compelled, it will be technically forced, it will be compelled to give bullish movement at least one bullish day, at least one bullish candle. Generally this kind of condition is seen when the movement or when the trend is bearish. Otherwise in the bullish trend this is very rare. So like if I show you, then on this day it hit the K equal to 0. Okay, and then what happened the next day? Next day there was a gap up open and a bullish closing, heavy bullish movement. Okay, all of the losses were recovered. So this is why it is very important and is very significant. Okay, and now it is coming into the K equal to D equal to 0 condition. So this itself is very rare to see, okay, especially in the bullish movement, bullish trend. Okay, but now because there is a crossover in the moving averages, so this is indicating, okay, a short term fall in the Dow Jones. That is why, okay, this is there. Otherwise the market would have retraced after hitting K equal to 0, okay, on Thursday. So on Friday it would have retraced, and on Friday we have seen a gap up open. Okay, gap up open in the market. That gap up open was because it hit the K equal to 0 on Thursday, right? Although the end result was bearish, okay, but it fulfilled its condition whatever historically we have seen. The first day it hits the K equal to 0, the next day it gives a gap up open. That is why again and again I have mentioned this to my Patreon community members, that if there comes a gap up open, there can come a gap up open, okay, then that gap up open will be only because of the above mentioned conditions of the Dow Jones. So now what can happen on Monday? Monday again Monday we can expect a gap up open. Although everything is red, bearish, but still we can expect a gap up open. Why? Again the same reason, because K is equal to 0 on 2 consecutive days. Now this gap up open might not help S&P, might not help Dow Jones much, because Dow Jones is already under pressure. Okay, after giving a gap up open it can still come down, but this gap up open will definitely help the S&P 500, because the S&P 500 through the gap up open can open about the tiebreaker. If you are my Patreon community member, then you know that most of the time what was the tiebreaker, and when it opens, okay, above this the tiebreaker mark, in that case S&P 500 will be in a very comfortable bullish position, okay, wherein any fall it can absorb any fall, just like yesterday also, okay, it will be able to absorb, you know, any fall, right? And any fall will then be limited to the zone itself. Then the zone is there, then moving averages are there, very extremely heavy support. Means by Wednesday 2 p.m. S&P 500 will be in a position to sustain at the zone irrespective of what is happening in the Dow Jones. Okay, But what happens if there comes no gap up open on Monday, rather there comes a flat open or a gap down open? Then also that will be very means that will be very good for the bulls, because if there comes any gap up open or a movement below 43,828, the last closing of the Dow Jones, okay, below, then it will trade red. When it trades red, then K equal to D equal to 0, K equal to D equal to 0, exceptional bearish saturation condition, and technically Dow Jones will be compelled to give a bullish movement. Okay. This means that if the Dow Jones want to give up more, then that fall may not happen, because Dow Jones is already extremely saturated, okay, in the bearish side, and extremely oversold, not overbought, oversold, and also it is overstretched. It has simply it is trading, okay, beyond its expected levels. This means if there comes any more red movement, this might act as a spring. This might act as a spring, and it can bounce, or it can as Dow Jones can bounce from this spring. Okay, when this happens in the Dow Jones, S&P 500 will be in a position, in a condition. If there comes any good bullish movement in the Dow Jones, there is a zone in the Dow Jones. Okay, there is the zone in the Dow Jones. Okay, a zone in the Dow Jones. Once the Dow Jones reaches to the zone or trades beyond the zone, okay, very near to the previous close, once it reaches and trades above this the zone, okay, then S&P 500 will be around 6,100. What is 6,100? Okay, it was the all-time high, it was a psychological level, and also it is my calculated resistance level, as I mentioned in my previous S&P 500 weekly technical analysis also. Okay, so that is the 6,100, right? So S&P 500 will then be around 6,100. Any breach, I'm saying any breach of 6,100 will bring more bullish sentiments, and then it will be trading beyond 6,100 towards its expected high of the season. Okay, so that is another reason I think that why the S&P 500 is reluctant to move up, because when it start to trade above 6,100, then its expected high is there. But there are these are two expected highs. Okay, one is in between 6,100 and 6,200. The other is a little above 6,200. Only two in this season. Okay, it can trade at most only two at first. Okay, this one very heavy chances, otherwise it will fail, okay, at the second. So that is why, okay, S&P 500 is seen reluctant to move, because if it moves up, then it will be compelled to give up and to lose more and to come down. But looks like that the S&P 500 and the market doesn't want to trade red as of now. Okay, and market might be looking for center rally or something like that. Okay, so this means 6,100, and any breach of 6,100 will bring more bullish sentiments. This may happen on Monday, Tuesday, Wednesday, whenever it happens. Okay, so this is not dependent on the FOMC or the Fed chairman. It is simply, okay, a technical reason. Any breach of 6,100, whenever it happens, then this will be the condition. Bullish movement after 6,100 will be limited in a manner that it will be reaching towards its expected high. Okay, first and second high. First high, very heavy chances it can lose from the first high itself. Otherwise, from the second high, okay, almost 100% it will lose. Okay, so it is similar to what I mentioned earlier also. Okay, that I think that was 2 or 3 weeks ago, where I mentioned when it was trading bullish, then when it reaches to my heavy resistance level, that was 6,100, then 100% there will be a fall, irrespective of anything, data, earnings, news, no earnings, irrespective of anything. It was trading bullish whenever it reached to my this resistance level. So at or around the resistance level, it will give up, and since then we have seen for last 5-6 days it is struggling. However, this is not the absolute fall. Okay, the high is not yet achieved. The high is beyond 6100. Okay, this is there in the bull side. Now for that to happen, okay, 6100 or beyond, at first the Dow Jones must clear and trade above this heavy resistance zone. Okay, heavy support zone, which is now acting as the resistance zone. Okay, when it trades beyond that, then the cluster of the moving averages will be around one resistance level. Okay, and then there will be more bullish movement, but now the Dow Jones is expected to give just a limited bullish movement, not much. Okay, this is in the bull side. Now comes the bearish side. Bearish side, as mentioned earlier, yes, the same thing, the same logic, the same principle will be applicable to the bearish side. Dow Jones is in a technical condition to give a bullish reversal to the zone. At least to the zone it will be there. Okay, for sure, 100%. At least to the zone it will be there bullish, whether it happens on Monday or Tuesday. It will be up to the zone. Okay, now if the Dow Jones manages to recover the zone, trades beyond above the zone, sustain above the zone, then more bullish movement in the SP 500. Okay, no problem. If the Dow Jones struggles, if the Dow Jones struggles at the zone, fails to clear the zone, okay, in that case what will happen? Okay, it will come down, and when it comes down, then the moving average I have discussed on the weekly chart, then that moving average will come into the picture. It will have to come down to that moving average, which is around 1% or somewhere, means a little less than or a little more than 1%, 0.8% or 1.2%, something like that. Okay, the moving average, then it will have to come down to that, the moving average. Okay, and then there it will find heavy support, and then only there will be a reversal. Okay, now when it retry for this the zone and struggles and fails, then what will happen to the S&P 500? S&P 500 as of now is strongly sustaining at the zone. Okay, so any reversal in the S&P 500 will be limited to 608x. Okay, my resistance is in the 608x. It will be limited to at most. Okay, so 6100 will not come into the picture. Okay, below that it is in the 606x. Okay, the resistance. So any retrace will be limited to, okay, this or this, and then there will be a rejection, failure, it will come down to find support at this, the support zone. Simple. Okay, so S&P 500 will again and again try to sustain and will try to not to lose the zone. Losing the zone will create a very heavy problem for the S&P 500. In that case S&P 500 can come down and lose 6000 psychological mark. Any breach of 6100 means more bullish sentiments, it will move up. Any breach of 6000 psychological mark means it is coming down to 59xx, and if all goes well, not well, if everything goes bad, and I will say, okay, in that case 58xx will have to come into the picture, because very heavy support zone is in the 58xx, not 59xx. There is a very heavy support this level in the 59xx, but the zone is in the 58xx. Okay, so this means that losing this, the zone here, means S&P 500 will be looking for 6000, not actually 6000, because before 6000 there is one more support zone, and that support zone is not that heavy, but if the fall remains normal, then definitely that support zone will act as spring for the S&P 500, will come down, bounce back to the zone, will recover the zone, will trade bullish. Only and only a heavy fall. When and how that can happen? Wednesday FOMC event. That FOMC event can bring down the entire market. In that case, this zone will be gone, and then 59xx and 58xx. Eventually 58xx will come into the picture to support. If the FOMC remains supportive, Okay, means the Feds, if they go dovish, okay, in that case it will move up towards its expected high of the, or expected peak of the season. Okay, that will be there. This means 6100, breach of 6100, breach of 6000. Okay, so in short, this means that for the next week we can anticipate a movement between 6100 and 6000. All is well as long as it is sustaining at the 6000 and never breaches 6000, and even if there comes 1 or 2 points of breach, then also immediately it recovers and sustains and closes above 6000. In the bull side, a breach of 6100 will bring bullish sentiments and it will move towards its expected peak, expected high of the season. There are two peaks. Okay, chances of failure at the first peak are very high, otherwise 100% it will fail at the second peak. Okay, now 6000 this, and definitely there is a very heavy support zone, very heavy support zone. That support zone is now also covered by the moving averages. So if it move, so if the S&P 500 loses this heavy support zone, in that case the next support zone might not help. Okay, eventually then 6000 will be tested. Okay, but whatever we are anticipating to happen in the S&P 500, it will be heavily dependent on the Dow Jones. What happens to the Dow Jones, because now the Dow Jones is under technical compulsion to give a bullish movement, means, or and now the Dow Jones has come into a condition where we are anticipating K equal to D equal to 0, means we can anticipate sharp, something like this, heavy bullish movement in the market or a short squeeze. Okay, that kind of movement in the market. This can happen as early as on Monday, as early as at open, during open, or just after open. Okay, yes, if on Monday if there comes an open and this open is seen in the open equal to low condition, means immediately upon open it moves up. Okay, then definitely there will be very good chances of a short squeeze. It will give abrupt, very heavy bullish movement. Monday, Tuesday, very heavy bullish movements. Okay, but whatever is going to happen or whatever will happen, I will keep you posted through these daily precise updates of the S&P 500 every day from Monday through Friday. If you are my Patreon community member, I will give you the pre-market update before the open of the stock market. I will give you the midday update after 3 hours. I will give you the final update before the closing of the stock market, so that you can prepare your trade for the next day. Okay, other than that, I will also give you the stock market opportunities in the premium stocks of the US stock market. So if you have not yet joined my Patreon community, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. And if you want to become self-reliant, you want to make 5% to 15%, okay, monthly basis, and you have some technical knowledge, okay, then you can opt for these the programs. Okay, 8 hacks, premium hacks, hidden hacks, works almost 100% of the times with almost 100% accuracy. Okay, options trading strategies, premium calculator, and the modified technical indicators, and all of this. So I've given the link in the description of the video and also in the comment section. So guys, if you have any questions that you want to ask, then please feel free to ask your questions through the comment section. And guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you like this video, then hit like. So guys, this was my S&P 500 weekly technical analysis for the week of December 16th, means from December 16th, which is Monday, to December 20th, that will be Friday.